Hello, I'm called Jingonelli, and today I'm going to be taking you through an example on double entry. But before I begin off, I'm going to require you to subscribe to the channel, and also you're going to follow my voice for today so that you don't get lost. So let's begin off on this example. It's saying an example on double entry. So Mukwano is a business person dealing in general merchandise. Below are the transactions for the month. Show the accounting equation and the balance sheet of the transaction below. So with this double entry, they're telling us that they're requiring us to show the accounting equations and also the balance sheet for the transactions below. So here we are having the first transaction, which is saying he started business with a lorry of 30 million and cash at bank of 20 million. So from the accounting equations, assets is equal to equity plus liabilities. I'm going to say my cash at bank is 20M, then lorry, which is 30M. So the total of the 20 plus the total of the 20 plus the 30 is going to equal to my equity, which is going to be equity, which is going to give me 50M. So when I balance off this side and this side, I'll be getting 50-50. So for that transaction, it's done, and the liabilities will be a dash because I don't have any liabilities from this statement or transaction. Then I go to 2. They're saying a motor vehicle of 10 million was bought on credit from Toyota Limited. Now from assets is equal to equity plus liability. What is happening? I first get record transactions from the details from the previous transaction, which was cash at bank of 20M, lorry of 30M. Then what's coming in here? Motor vehicle, which is MV, which is coming in, which is of 10M. So assets are going to be coming in, and assets are increasing by 10M. Then the equity remains the same, but the liability is coming in since we bought this motor vehicle on credit from Toyota Limited. So a liability, which is a payable of 10M, is going to come in. So once I add this side of the assets, which is going to give me 60M, then I added the 50 plus the payables of 10M, which is going to give me 60M. So this equation has also balanced. So moving on to the next, I already told you that we keep record of our previous transactions. Then they are saying he bought inventory of 6M using a check. So here, what is being affected? You should always know what is being affected. What is being affected is bank and inventory. So when I come to the cash at bank, remember cash at bank previously was 20M, but now when I subtract the 20 minus 6, because I'm paying off an inventory, I'm going to remain with 14M at cash at bank. Then lorry will remain the same 30M, motor vehicle will remain the same 10M. Then inventory will be coming in, which I bought using the cash at bank of 6M. So when I go to equity, it remains 50M. And then when I go to the payables, it remains 10M. So when I add the 14 plus 30 plus 10 plus 6, I'm going to get 60, and also this side is going to be 60. So from there, the equation will be balancing 60 60 60. So I go to the next, bought furniture of 42 or 4.2M from Huan Sang on credit. So here what is happening? Furniture is coming in as an asset, and also a payable is increasing because he gained another liability. So from the asset, remember, we keep track of our previous transactions. So cash at bank is 14M, then lorry is 30M, then motor vehicle is 10M, then inventory is 6M. But what's coming in? Furniture of 4.2. So 4.2 is here of furniture. Then equity remains the same. Then liability, remember here the liability is going to increase. So from 10M, you add there a 4.2, which is going to give you 14.2 because he bought it from a Hang Seng at on credit. So when I add 42, this side is going to give me 64.2 M, and also this side is going to give me 64.2 M. So the fifth transaction is saying he used his salary to buy a shirt of 80 M. So for this one, we are going to just ignore because it's not a business transaction. Then we go to the sixth one, which is saying he sold. Now, so we're going to be very careful with this one. He sold two-thirds of the inventory for 3 million cash. So here he's selling inventory, two-thirds of the inventory for cash of 3M. So he's bringing in cash into the business. But what did he sell? Or what? So we are going to look at what he sold. He sold two-thirds of the 6 million. Remember previously inventory was 6M. So it's going to be 2 out of 3 times the 6M, which is going to give me 4 million. So he sold 4 million, that is of the inventory, for 3 million of cash. That means he made a loss of 1M. That means he sold inventory of 4M for 3M. That means he made a loss of 1 million. So this is going to be my gross loss per now. Remember, when I don't have anything to adjust with the gross loss, it will equate to my net loss. But per now, let me call it gross loss. So that will be his gross loss. Then what he remained with from inventory is going to be the other third, a third of the 6M, which is going to give me 2 million. That means with inventory he remained with 2 million. So he has 2 million as inventory now. So when I come to the assets is equal to equity plus liabilities, I'm going to record my cash at bank. Cash at bank previously was, we left it at 14M, which is 14M still. Then we are bringing in cash at hand, or I can call it cash, which came from the sale of inventory. So it's going to be cash at hand of 3M, then lorry 30M, a motor vehicle of 10M remaining. Then inventory, remember what we remained with. We remained with 2M. From the 6M we remained with 2M, and then furniture of 4.2. So when I add all this, is going to give me 63.2M. Then here equity capital is going to be 50M, and then I get to record my gross loss of 1M, which is going to be deducted, which is going to subtract something from the capital, then plus the payables, which is 14.2M. So when I added this side 50 minus 1M plus 14.2, I'm going to get 63.2. So meaning my for this transaction 6, my account will be balancing. Then moving on to the next is he secured a DFCU loan of 50M, which was deposited to be paid within 1 year. It was deposited to the bank account. So using the assets is equal to equity plus liabilities. So here I have to know what is being affected. The bank account is going to be affected, and even a payable is going to come in, or a loan. Loan is a liability. So I'm going to say my cash from 14. Remember I left it at 14M. So I'm going to add there the loan, which is plus 5M, which is going to be cash at bank is going to be 19M. So the rest remain the same. Cash at bank remains 3M, lorry 30M, then motor vehicle 10M, inventory 2M, then furniture 4.2M, giving me a total of 6.2M. So we go on the equity side to see if to equate to that. So capital is 50. Remember gross loss is 1M. Then plus the payables of 4.2, but loan came in. So a loan is a liability, which is going to be which is going to give us 5M. So after doing that, that means when I added the 50, when I add 50 minus 1 million, then plus 4.2, it's going to give me 5M. So this side plus this side is going to give me 68.2. Yeah, but remember this this loan is it's to be paid within 1 year, so that makes it to be, so that is with that. Then they say he paid Hang Seng 2.2 cash. So with this we are having our assets is equal to equity plus the liabilities. So they're saying cash at bank is going to be 19M. Then cash at hand is going to be 0. Now here they're saying he paid Hang Seng 2.2. That means our cash we had, it's going to reduce from 3M here minus the 2.2M. You're going to, it's going to result into 800,000, which is like 0.2M. I've called it that. Then lorry of 30, then MV of 10, then inventory of 2M, then furniture of 4.2M, which is going to give me 66M. Then equity remains the same, capital 50M, then gross loss. And then here what is going to happen, our payable is going to be reducing because we paid Hang Seng. Remember, we had taken goods previously on credit, so it's going to be 14.2 minus 2.2, which is going to give me 12M. Then the loan of 5M. When I add these, I'll get 66. I'll get 66M. So after knowing that, it takes me to transaction 9. I paid the utilities of 800,000 by check. So with this transaction, what you should know that utilities he's paying for expenses, but using what? Check. So that means my bank is going to reduce. So 19 minus the 0.8 or the 800,000 is going to give me 18.2M with this transaction. Then cash at hand remains the same, 0.8 or 800,000. Then lorry 30M, then motor vehicle 10M, then inventory of 2M, then furniture of 4.2M. Then after knowing that, adding all this is going to give me 65.2M. So when I go on the equity, it's going to be 50M, and this side is going to be my gross loss. Now on the gross loss, when I have a gross loss, I will add there the operating expenses, and with the operating expenses I'm having utilities, so I'm going to add there the expenses, which is utilities, and it's going to be gross loss plus the utilities. Remember, utilities I'm already subtracting, so it's going to be a negative plus a negative, which is going to give me now a net loss. So this is going to be now my net loss, a net loss of 1.8M. So after doing that, with the payables remains 12M, then loan 5M. So when I add the 50 minus the 1.8M, then plus 12, then plus 5, I'm going to get 65.2M. Then he used the business debit card to withdraw 1 million for buying a mobile phone for his girlfriend. So here he used business money, that is the business debit card to buy a phone for the girlfriend. So these are drawings. So it's going to be assets is equal to equity plus liabilities. So cash at bank is going to be 17.2 because from the previous transaction 18.2 minus the 1M, which is reducing the bank, resulting to 17.2 because you use the business debit card. Then cash at hand is going to be 800,000, then lorry 30 million, then motor vehicle 10 million, then inventory 2 million, then furniture 4.2 million, and it's going to give me 64.2M. Then equity is going to be capital of 50M. Then we're going to get a net loss. Our net loss, total net loss is going to be 1.8M, then minus the drawings of 1M, then the ratio remains the same of 12M, payables, loan of 5M, and then we are going to be getting a total of 64.2M from this side. When we get equity of 50M, then minus 1.2, and then minus 1 million, we are going to be getting the minus 1 million plus 12M, then plus 5M. We are going to be landing on 64.2M. Then moving on, remember our question had required us to also extract a balance sheet, or what I may call the statement of financial position, and it was at 31st January. So after you knowing that, then we can have our assets. You know how the format looks like for a balance sheet. So with that, it's going to be assets, fixed assets, which is lorry of 30M, motor vehicle of 10M. Here was accumulated depreciation, we don't have anything. Then net book value is going to be equal to the cost, so 30M is going to be 10M. Then we are having current assets is equal to inventory, which is going to give me 2M. Then furniture 4.2M, cash at bank is for 17.2M. Then cash at hand is going to be 800,000, which I've called 0.8M, but it's 800,000. Then total assets is going to be 64.2M. Then with equity and liabilities, it's going to be equity, it's going to be with capital of 50M. Then our net loss of 1.8M. Then you less the drawings of 1M, and then it's going to give you total equity of 4.2M. So 50 minus 1.8 minus 1M is going to give you 4.2M. Then with the liabilities, I think I made a mistake. This shouldn't have been a non-current, as if it was to be paid in the long run, it would have been a non-current asset. But they're saying it's to be paid within. They're saying it's to be paid within a period of 1 year. You get to remember that. So it's here on his bank account to be paid within a period. To be paid within 1 year. So if it was more than that, it would result into. If it was more than that, these are first, hold on, these are debt payables for a period exceeding more than 1 year. Okay, if it was exceeding more than 1 year, it would be a non-current liability. But so what you're going to do, you're going to just cross out the non, so it becomes a current liability, and then you're going to cross out this non, it becomes a current liability, so it merges up with these other current liabilities. So you can this middle current liability, you can just cross it out, and you call all these current liabilities. Then you're having payables, and even then that will be all. So your loan will be of 5M, and then the current liability is going to be 12M, and then total liability, when you add 5 plus 12, you're going to get 17M. So when you add this plus the 17M, you're going to get 64.2M. So with that, yeah, thank you so much for watching and listening in. Make sure you subscribe to the channel.